Hey, good morning, everybody, and welcome to the Ankerstar Wealth Morning Show. And I don't know if you've tuned into your app, CNBC, Schwab, whatever it is that you particularly look at markets in the morning when you just wake up, grab your phone, and of course check them, right? Okay, maybe just us in the business do, but if you're listening to this, you probably do. But you saw something today, nice big green numbers. Thank you to what Mike's going to talk about today, largely Google. There's some Microsoft thrown in there. There's a couple of others, but really they're kind of carrying the whole market higher. We're just after the open. The NASDAQ is up over 1%. You know, Ankerstar Wealth and all of the models follow pretty heavy along the tech lines for a reason. And we like that, of course, when the market's going up. And of course, we have to stay strapped in when the market's not. But that's what Mike's going to talk about. He's going to start us off this morning talking about the good news. And then I'm going to piggyback, not to be negative Nancy on Friday, but if you followed any of the President Biden's proposed tax changes. Now, they throw everything out there, right? But we're going to talk about some of the craziness of these proposals. But the only thing I can assure you is that if you are sitting there thinking that things aren't going to change, the only thing I can say for sure is things will change. Social Security will change. It will obviously bankrupt in less than 10 years now, or right at 10 years. So, there's things that are going to change. We're spending, we need to raise more money through taxes, how to do it. Everybody's got an opinion. So anyhow, that's what we're going to talk about today. Before we get started though, this is a financial education presentation. You have to do your own due diligence for acting upon anything here in this presentation. More disclaimer information is available at ankerstarwealth.com. The opinions expressed today are Mike and mine alone. With that, over to you, Mike. Talk to us about some good news.
Okay. It's Friday. That's always good news. Friday, and the NFL draft is over. Every team is still undefeated. They've got their happy first round pick. It is good news, and it's green. So here, let me share my screen, and we see green. Green across the board, or mostly across the board. So especially the NASDAQ up 1.31%. And after yesterday's sell-off, which started off very, very negative, but it recovered. I could even pull some good news out of that, is that it got better throughout the day. We certainly look forward to hearing Google and Microsoft earnings after the bell yesterday. And Google delivers, which is in our model. So I love when it's something that's across our models. A lot of our models have direct access to Google. So let's take a look at what they did. And right now they are up over 10%. And when you consider you're up 10% and you are a $2 billion or $2 trillion stock, that means you're up 200 billion here, or 200 billion. That's like full companies. And this graph here is a 6-month graph. You can see the surge, but let's look at a 5-year graph. They are at an all-time high. So I guess ChatGPT did not knock Google out of business. Google is in this AI game and doing well. Some of the big news that Google had is they are now going to pay a dividend. So that makes people that are dividend seekers like, maybe I'll buy some Google. They go up. Another thing is they announced, $70 million stock buyback?
Billion, yeah.
$70 billion stock buyback. That means they have cash on hand to buy that. Or somehow they're doing that with I would assume it's cash, because now's not a great time to borrow to do that. And the companies that are doing best in this kind of higher interest rate environment are companies with lots of cash on hand. So there goes Google. Great news for our portfolio. Another one that came out with news after the bell, Microsoft, also directly in our portfolio, up 2.2%. But once again, we're talking a $3 trillion company. So that means they went up basically $60 billion in market cap. Not quite at their all-time high, but right around there, and certainly up this week. So those two stocks are primarily what's causing the rebound. There's other good news out there. If you were a direct holder in Snapchat, I'm not, but they're up like 24%. No, we did not put money in them in our models, but hopefully they're down there somewhere in one of our tech leaders. I hope. I don't know. Maybe all my kids are like, yay, buy the stock, but I don't think so. So great news going into the weekend. As always, there's down days, there are up days. We celebrate when there's up days, and we do not panic when they're down. Overall, the market does go up. I have not heard a lot about the presidential election so far. I haven't heard a lot of contention yet. I fully expect this will start to ramp up, and we'll see where all this goes. So good news going into the weekend. Back to you, Steve.
Yep, sounds good, Mike. Thanks. Appreciate that, and especially with Google. I don't show Inside Baseball too often, but I will right now, making sure that, yep, good to go. So this is the screen that Mike and I and all the other advisors use. It's the Schwab Advisor Center up in the left. And I have Ankerstar Wealth, the firm, pulled up here. And we, have almost 70 mil with Schwab, and then we got another 10 to 15 mil off in alternative investments not depicted here. But you can see I have things listed by market value of what we're exposed to. Google overnight leapfrogged Amazon to be our number 3 holding. And I think that's going to continue. I mean, the dividend's exciting. That allows, like Mike said, not just for folks that are seeking to get dividend exposure, but for an ETF that might have a charter that they have to have a dividend to be in that ETF. I mean, they're going to be buying it hand over fist now because they couldn't buy it before, but now they can. Same thing when Apple did this. They got exposure even with just a little baby dividend. I think Google's doing 20 cents a quarter, 80 cents a year. Obviously, that's fractional, but it all adds up, and there's a lot to it. And that stock buyback thing, man, that's huge. Remember, a share is a share by definition is a share of the whole, albeit there's lots of shares, right? But anytime you retire some shares, your incremental share owns that much bigger piece of the entire pie. So really exciting news for Google, and they're doing the right things from a leadership perspective. All right, let's talk about, I'm not trying to say you should be worried because every situation is different, but the only thing you can count on for sure is that goalposts move over time, and largely that keeps folks like Mike and I and the team employed. But you can stay on on top of this all yourself, but it's a fast moving ball game, and there's things you need to do when things change. So this one article, first one, CNBC, Americans are worried. Why are they worried? Well, it's interesting. I got from most retirees don't delay their Social Security benefits. We all know that it's going to run dry supposedly in 2034. That sounds like a long way away. In real world, that's 10 years. Right. So, and how fast days are slow, but weeks, months, and years fly by, is what most of us experience. So, yeah, it's coming up quick. So something's going to change, whether they delay ages, reduce benefits. It'll be interesting. That second bullet there in blue, peak 65. This article is talking about women, but in general, men and women are turning 65 at record numbers between 2024 and 2030. So really, when you're looking at compounding the problem, there's a math problem anyway, but also demographically, we have the boomers hitting that spot. So that makes the problem even worse. And then Mike covered this, I don't know, it seems like a few weeks ago, maybe it was over a month, but it used to be, go to graduate high school, get a trade, or go to college, and then enter the workforce and save 10%, and you'll be a millionaire and you'll be fine. Well, if people are finding $1 million due to inflation, isn't what it used to be. Now it takes more like $1.5 million. Everybody's retirement's different, but certainly some things to think about with the dynamics that are going on. And I would say that, largely when you're looking at people Mike and I's age, say 50s in general, we've benefited from lifelong investing in markets that have gone, pretty much straight up, especially since 2008, 2009, with a couple of blips. But largely, we've built all this wealth. And when we work with younger folks, it's just tough to even think of, what sort of savings rate they need. It's like 20+%, to save for retirement, to do the same thing that might, our age was able to do at like a 10% savings rate. So things to think about there. Point teach your kids about money. It's important they know what's going on. And, even you don't have to be an expert. You just know more than they do. So help them out, give them things to think about, and tell them that they should be saving for their future. All right. Taxes. That's one of the major things we do for folks. Yes, we like investing and making you money with your money, but then we also like keeping as much money as you can and protecting it. We all pay our taxes, but we want to maximize the tax code or minimize the tax code, however you want to view that. Certainly, if you've seen the headlines, is 44.6%. I do want to break that down for you a little bit. So it's in this paragraph. I'll highlight it. But right now in 2024, the top tax bracket, I think it's 37%, and it kicks in at like $600 and some thousand. But the top bracket is 37%. Part of the proposal is to move that to a 39.6%. So there's obviously 2.6% increase that could affect a lot of people, right? I mean, obviously we're often a pretty wealthy chunk of society, or high earning. I wouldn't say necessarily wealthy, but in addition, there's this 1.2 increase to net investment income tax. And we do help folks with this regularly. Remember, if you make over $400,000, then you have to pay another 3.8%. That's already baked in right now. So really, when you talk about top tax rate, it's not really 37. It's already like 40.8, 40.8, because you have to pay that net investment income tax rate. That's going to increase by 1.2% is the proposal, which would mean another 5%. So really, when that's the numbers that are leading up to that. So that in itself, I mean, we have to either stop spending, right? Doesn't appear that anybody's willing to do that from either side of the fence, or we have to raise taxes. How are you going to do that? Well, there's a lot of ways to take a look at it. The last one I want to talk about is if you saw this, there's a lot of proposals out here. The corporate tax rate going to 28 from 21 is one of them. That would be a big deal, if you will, 7% haircut for businesses from my size all the way up to, the big ones, if you will. Again, we're sitting at 21% from the Tax Cut and Jobs Act of 2017. So pretty optimal to get that economy going. That would be a headwind, right? That would hit the market directly, right? Because now 7% more is going to the government off of everybody's books. Let's see, the other one that I think would be disastrous here. I have it in purple here. So there's a consideration, and I don't think there's any way this can happen. I guess I shouldn't say that. I think there's a very small chance that this happens, but it's a tax on unrealized gains. So as investors, that you don't owe your taxes until you sell something, right? So, and when you sell it, if it's for a loss, you get to write that off. If it's for a gain, you got to pay some taxes on that. And then, of course, capital gains are tax favored at different levels depending on your income. Or if you just keep it till you die, then you pass it on to your heirs, and there's a step up in basis. A million different scenarios inside of that, but generally that's what's going on. This would be a collection of a tax while the assets appreciate, but before you sell them. All kinds of problems with that, right? I mean, stocks go up. What if you were getting taxed on your Tesla stock that you thought, hey, I'm a genius and Steve is dumb, and when it goes up to like $700 a share and you're getting taxed the whole way, and then now that it's cratering, okay, yeah, it had a good week this week, whatever. But for the most part, now that it's cratering, you paid all this tax on it, but it's like it's not worth what it was. Anyhow, it's a nightmare. And then it says, only applicable to taxpayers with wealth greater than 100 million. There have been some states, and I lived in Florida and was a Florida resident when they had a wealth tax, and you had to declare your wealth on your state income tax form. They didn't have state income tax, but you had a wealth form you had to figure out declaring your assets. Well, when I was 29, I didn't have to worry about being over, whatever, I think it was $1 million or something like that. But now, I mean, they're saying greater than 100 million. And, it's like, okay, that's not everybody, right? But they are out there. And here's the kicker is, how do I prove I'm not worth 100 million, right? As a business owner, am I going to have to pay, is the government going to say you have to pay for a, $25,000 financial audit every year to prove that your business isn't worth 100 million? Oh man, this is just, when Trump's kind of the hot button for trying to measure wealth. Yeah, when you own a lot of assets, they're always in fluctuating, and some of them don't have direct values. I mean, how do you measure that? You just it would be ridiculous. And then you hear stuff like this, and somebody thinks that's a good idea. But the headwind to the market is, honestly, if you're going to start doing this unrealized gain tax, people could stop investing, right? Because part of the benefit of investing is the tax break that you get by investing. So it'd be another huge headwind on the market. So not to put a damper on the bright greenness of the day, so we'll close back with that. Yes, it's green. There's Google, 10%. I love it. Some other names you might recognize in there. But yes, let's have a good day. But don't forget, there are some tax changes that are coming up. And again, it's Mike and I's job, as well as the rest of the team, to get that information out to you once it's passed into law. But right now, it's just stuff that is out there under consideration. All right, Mike, any closing thoughts before we wrap up for today?
I just see NASDAQ up 1.76 on your screen, so I'm loving that. And I did see Datadog with some green, and that's one of our ego stocks. Like that too.
Go.
So
there you go.
Good news.
I love it.
Have a great weekend.
All right. All right, guys. Appreciate it. We'll let you go. You guys have a good weekend. We'll see you back Monday. Bye.